Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's first take a look at the main stories for this week. The Colombo bourse reaches all-time high. Vehicle import ban to be lifted. And strong export growth, deflation persists. In our top story this week, the all-share price index at the Colombo Stock Exchange reached an all-time high, beating the previous mark of 13,460 last seen on the 19th of January 2022. Moody's review of Sri Lanka with a possible rating upgrade, continuation of the IMF agreement, and interest rates cuts is driving the bourse higher. Banking and plantation sectors gained significantly, which also helped the S&P SL20 index cross the 4,000 mark. The market has gained nearly 2,400 points since the September presidential election. During the week, average turnover also improved to 3.9 billion rupees from the 3 billion rupees last week. The Sri Lankan government gave the green light for the resumption of vehicle imports starting from February next year, ending the 5-year ban imposed in March 2020. Earlier, the Central Bank of Sri Lanka had also agreed to resume vehicle imports, citing sufficient reserves. Indika Sampath Merinchige, president of the Vehicle Importers Association, said there are 600 vehicle importers in the country and limited funds should be well managed to meet the needs of the ordinary citizens. He also noted that the resumption of imports should bring down prices of used vehicles, which remain at elevated levels. Removing vehicle import restrictions should also boost the government's tax revenues to the IMF's target of 15% of GDP. Prior to 2020, vehicle imports brought over 200 billion rupees in tax revenues. Merchandise exports in October rose 18% from a year earlier to $1.1 billion. In the month, apparel exports rose 22% to $430 million, while tea, rubber, and coconut exports also recorded strong growth. Exports to the United States, Sri Lanka's single largest export destination, rose 19% from a year earlier to $247 million, while trade to the European Union also rose significantly to $252 million. Services exports expanded by 20% from a year earlier to $323 million. In the first 10 months of 2024, service exports have reached $1.4 billion, a 19% growth from a year earlier. Sri Lanka's key inflation rate continued to be deflationary in November, falling 2.1% from a year earlier, making the third month of continued deflation. This is also the highest deflation rate the nation has recorded since 1961. Food prices fell 0.6% in the month, while prices for non-food items fell 3.3%. According to the Central Bank of Sri Lanka, deflation is expected to continue well into the first half of 2025 before normalizing to 5%. The recent introduction of the overnight policy rate is expected to help stoke demand in this regard. Sri Lanka's private credit grew by another significant 74 billion rupees in October 2024, rising for the sixth consecutive month, bringing the year-to-date disbursements to 50 billion rupees. Meanwhile, a net credit to the public sector contracted by around 63 billion rupees in the month. On a related note, Sri Lanka's net foreign assets after covering reserve-related liabilities turned positive in November, with around $63 million over liabilities. In October, Colombo port transshipment volumes rose sharply to over 536,000 20-foot equivalents, a 25% rise from a year earlier. Year-to-date transshipment volumes rose to 5.42 million TEUs. Recent growth has been made possible due to normalization of the Red Sea crisis and reduced volumes of container ship arrivals, boosting effectiveness. On a related note, the Colombo West Container Terminal is expected to have a major equipment boost with the arrival of 2 ship-to-shore cranes and 3 years gantry cranes. The terminal is nearly in completion of Phase 1 with the completion of the 600-meter jetty deck. In our weekly tourism update, in the month of November, over 184,000 tourists arrived in the country, bringing the year-to-date total to over 1.8 million. Daily arrivals rose significantly to 6,139 in the month from the 4,384 recorded in October. India continues to be the primary source market, followed by Russia and the United Kingdom. Although a 35% increase from last month, it was still below the SLTDA forecast of 198,000 tourists. Following the interest rate cut, At the Treasury bill auction held on Wednesday, yields on the 182-day maturities fell. Bids amounting to 402 billion rupees were received, of which 192 billion were accepted. The Sri Lankan rupee appreciated for the third consecutive week, with the central bank's indicative mid-spot rate ranging around 290 to 291 rupees against the dollar. So far this year, the rupee has appreciated over 11%, making it one of the best performing emerging market currencies. And with that, we wind up for this week. Do subscribe to our YouTube channel in the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.